Wow, amazing numbers this morning, just out minutes ago from the ADP jobs report. I'm going to break this report down, tell you why this is amazing, but also talk about why Jerome Powell might end up being nicer to us over the next few months than you actually expect. Now, this is very exciting, I believe, for the markets. And boy, oh boy, am I excited and ready for the markets to be happy again. But I'll also talk risk factors because we don't want to be blindly bullish. What we also don't want to be blind to is two updates quickly regarding House Hack. Today is November 30th, which means today is a deadline for signing your DocuSign at househack.com. If you're an accredited investor, sign your DocuSign at DocuSign.com and make sure at househack.com and make sure that you wire your funds within the next business week to qualify for the November warrants before that expires. Then, for non-accredited investors, we are about to submit to the SEC, which we're very, very excited about. So stay tuned for more House Hack updates. Okay, let's get into what just happened with the ADP jobs report. Now, this is really incredible. Just so you know, we were expecting, and expectations are a big deal for the market. We were expecting 200,000 jobs. Oh, come on, iPad. We were expecting 200,000 jobs. Last month, we had 237 or 9,000. It was 9,000. There we go. 239,000. So that was the last month gain plus 239,000. This month we were expecting plus 200,000. Folks, what did we end up getting? Holy smokes, only 127,000 jobs. Now, that is actually good news for markets. I understand it's not the best news for employees because the less jobs are actually created for employees means less ability for employees to demand higher wages. And they're more likely to stay at their existing jobs because when they get laid off, or if they end up leaving their job, they might not have a place to go. If they get laid off, same thing. Then they fill up other vacancies, and that's exactly what Jerome Powell wants. Remember what Jerome Powell wants is he's very frustrated that for a majority of this year, there have been 2 job openings for every 1 employee unemployed or person unemployed. He wants that to be about 1 to 1. So the more we get jobs reports that come in low or potentially start coming in negative, the better. In fact, Goldman Sachs believes that we're going to see an average job gains of just 30,000 jobs throughout 2023, and that's going to align with potentially a recession and Jerome Powell really having to be less aggressive. Now take a look at where some of these jobs were lost, and then let's talk about what to expect because Jerome Powell talks today, and I gotta tell you, is he gonna talk dirty to us? Let's talk about that. But look at this. I mean, we are broadly negative in some very, very, very clear categories here. We are clearly negative, 100,000 jobs in manufacturing. This is a huge negative number here. Goods producing, an absolute plummet here. Look, a lot of people are talking about how great Black Friday and Cyber Monday sales are and how there are record sales and all this. When you adjust for inflation, most of the Black Friday and Cyber Monday sales were actually negative year over year. And companies are stocked to the wit's end with product. You probably saw my Black Friday video. And if you didn't, I encourage you to go watch it because I think deflation is imminent with some of the madness that we're seeing. But this is reiterating that. Manufacturing jobs, losses of 100,000. Corporate jobs, 77,000. Finance jobs, 34,000. Information jobs, 25,000 jobs. Huge weakness in this number here, well below expectations. Of course, the one area that's still booming, and this is no surprise, is leisure and hospitality. This is just expected to continue to boom as people right now are starting to move from spending money they have to spending borrowed money by borrowing more money on credit cards or using personal loans. If you want to get afraid, go look at SoFi's earnings and you see their personal loan growth. It has exploded because people are borrowing money and spending it. Now, fortunately, people are still paying down these loans, but then, and we're actually seeing a rising rate of loan pay down, but then you wonder, hey, if you borrow $100,000, just as an example, it's easier for you to pay down other debt, right? But you kind of just replace some debt with new debt, and now you actually potentially have more debt. It's crazy and it's fascinating, but there's no doubt that the economy is slowing down, and we've got to talk about that in Jerome Powell. But first, let's look at this briefly here. This is the median change in annual pay year over year. Job changer is still sitting at 15.1%, twice as much as job stayers. But when you start getting negative reports like this, what happens? People stay. Where's the most inflation? Well, tentatively for employees, it seems to be in trade, transportation, and utilities, coming in at about 8.1%. So we'll see. But this is a very disappointing report with actually, look at this, large establishments being the big job losers here and small establishments. Only a black screen of death here. Only medium establishment saw real job gains here between 50 and 249 employees. Really interesting, especially given leisure and hospitality. A lot of restaurants have staff of between 50 to 200. All right. Now, Jerome Powell, what to expect? Jerome Powell speaks today, November 30th at 10:30 Pacific time. That is 1:30 Eastern time. Here's what to expect. Jerome Powell is going to give us probably hints on getting a 50 basis point hike in December. Of course, he's going to tell us that inflation is his top priority and that they are not going to relent, or that they're not going to pivot anytime soon. Keep in mind, when the Fed talks pivot, what they're saying is we're not going to reduce rates anytime soon. We're going to keep rates higher for longer. He's got to keep talking the talk to make sure markets realize, no, we're not stopping until inflation comes down. He's got to do that. But what do I think might be different this time? I actually think Jerome Powell can take the foot off the aggressiveness gas pedal a little bit. I think he can talk a little bit nicer to markets. And the reason I believe that is because we're seeing substantial softness in the housing market. Real estate agents, a third of them can't pay their rent because there aren't enough deals to go along. The private plane market, the private car market, all of these are coming to almost a standstill. You look at the housing market, and I don't understand why the government is like this, but they just came out with the September numbers, minus 1%, 1.2% on a month-over-month basis for real estate purchase prices or sales prices. This is kind of like what we saw in 2009, and it took until 2011 for the real estate market to bottom. And that's the last time we saw real estate prices drop over 1% on a month-over-month basis. Month-over-month, 1% means roughly 12% a year. Roughly, that's annualized. That's a lot for real estate. Real estate moves a lot slower than the stock market, where obviously we could see 12% stock market moves in a day. That's why it's important to diversify into other things. But, wow, okay, what is Jerome Powell potentially going to say? Well, again, very clear mission on inflation, but break-even and expectations for inflation have been coming down. Both the consumer expectations for inflation have been stable. They ticked up a little bit in the preliminary, and then the final they ticked down a little bit, so we're kind of vacillating, but we're relatively well anchored. And market expectations for inflation, measured by the 5-year break-even, are back to where we were in September, which is really a good thing that we're seeing it stable. It was rising there for a while, and that's why Jerome Powell talked pretty aggressively to us during that last press conference, in addition to an idiot reporter making a terrible mistake telling Jerome Powell, oh, the market's rallying because of what you're saying, because they had started talking about we're going to respect the lags of our policy. And Jerome Powell let us have it, telling us how no progress has been made over the last year. We're not backing down until we finish the fight. He went really aggressive. I actually think because he went so aggressive, when we got the minutes, it was clear. They wanted us to clearly see that they think the odds of a recession are now just as likely as not. That was the big takeaway from the minutes last time. And they started having other Federal Reserve banks come out and say, we might end up in a recession here because we might be tightening too aggressively, and maybe it's worth being a little bit more patient. Now, that doesn't mean lower rates, but it might mean, hey, look, let's maybe slow down a little bit, go to 50 basis points. You could always tighten more. Now, we have to be careful here because I will tell you this. It is easier for the Fed to loosen than it is for the Fed to tighten. Tightening is hard. And sure, they could come out and rug pull the markets and just raise rates 1 or 2%, but that generally is unlikely. They're more likely to cut rates like they did during the pandemic from, say, 2.5% to 0 overnight, which they did on an emergency meeting. I'll never forget it because they covered it. But wow, I actually think Jerome Powell knows that at this point, the damage is done and the market is convinced inflation is a big priority. But what did we just have in Europe and this jobs report that came out today? signs that it might be okay for the Fed to at least talk less dirty to us. Inflation finally inflected down by the largest amount today in the Eurozone. It's still at 10%. It's still incredibly high. But the change was the largest drop that we've seen in 17 months to the downside in inflation in Europe. And it's potentially a sign that maybe we've hit a peak in Europe for inflation, just like we hope we've hit a peak for inflation in America in October. Of course, we got the October report here in November, and we're going to get the November report in December. Mark your calendars for December 13th. And even though I believe it would be okay for Jerome Powell to relax a little bit with his aggressiveness, and we might see a little bit of green in markets because of that, and he might be okay with that. I think he has a lot of control over that. I do think markets are likely to get tentative again in the week prior to CPI, which means we really only got potentially a week of green, and then the CPI nervousness ticks in again because CPI is December 13th, and we're already at the last day of November. So we're within 2 weeks of that CPI report, and everybody's going to be paying attention to that one because we could have 2 in a row now of inflation finally coming down, just like it came down in October, just like producer prices came down, just like inflation in the Eurozone is coming down, just like the real estate market is stalling, the car market is stalling, layoffs are happening. This jobs report was pretty terrible today, the ADP report. We're going to have the official jobs report as well in 2 days from the Bureau of Labor Statistics. I'll be covering that live on Friday at 5:30 a.m. There's a lot pointing to the downside. And that's why I think it would be reasonable for the Fed to lay off on the harshness because so much is already happening. The damage is really starting to come in hard here in October and November. And I think it's okay for him to kind of play this balancing act where it's kind of like, okay, gone a little too aggressive. You know, we're starting to look pretty good. We're confident inflation's going to come down maybe. We see what he says, right? But market goes up a little bit. Okay, let's keep it there. Let's keep it there. Oh, but we got to wait for the next report. Oh, let's keep it there, right? They're playing the fiddle right now, okay? We're the ones getting fiddled. And I don't like getting fiddled. But what are you going to do when you're in and you're looking for pricing power? Anyway, thanks so much for watching. Folks, check out House Hack via the link down below, and we'll see you in the next one. Good luck and goodbye.